Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've had this non-farm payrolls report, pretty difficult payrolls report to read really. The market was sort of looking at different aspects of this payrolls report as to what they actually meant. Obviously we had the hurricanes in September that had a significant impact across the labour market generally. 33,000 jobs lost across the US on September. That was way below estimates. But in conjunction to that, we also had the 2.9% increase in average hourly earnings for the year. So there was a significant sort of volatility coming out of the payrolls report, a lot of movement around the dollar, bit of a net dollar negative outlook sort of in the initial look at the payrolls report, but generally I think what we are seeing is a US dollar strength trend that continues to hold water. I think seeing as we've got the Trump tax reform plan underway, the market is looking at that in addition to the positive data on the ISM manufacturing and non-manufacturing. We've got the Fed coming out with increasingly hawkish statements and the expectation for monetary policy tightening further in December, and that is all helping to drive these treasury yields higher. You saw the 2-year higher, saw the 10-year sharply higher. We're seeing the 2s10 spread pulling higher. It is ever increasing through the Trump trade of November, December. We saw the 2s10 spread going widening by around about 20 basis points. At the moment it's only widened by around 5 basis points, so there is still plenty of move, I think, potentially in that, which could help to drive these markets, the dollar and equities, higher. So into this week we've got the inflation data at the back end of this week. That I think will be a key factor at play. We've got the PPI, we've got the CPI, both numbers I think will be watched by this market, and I think ultimately the market will be looking out for whether we can see inflation starting to bottom. We had, as I said, average hourly earnings picking up. Does that feed into the inflation data this month? We're expecting to see core CPI picking up slightly. That would be the first pickup in 2017. So will that begin to turn the corner? Will that begin to see the markets pricing more for further rate hikes in 2017? Because at the moment it's way behind the Fed in terms of the Fed thinking 3, the market's thinking maybe 1 at most at the moment. So that's I think going to be key through this week. So we've also got, just before I get into the Forex, we've also got a lot of UK volatility actually as well on sterling. We had the Conservative Party conference last week, a lot of volatility around that. Sterling sold off sharply on the sort of assessment that Theresa May was living on seriously borrowed time. Seems as though that her position arguably could be stabilised if she puts through a cabinet reshuffle. That's helped to drive sterling a little bit of a rebound today on Monday morning, but will that be the case if she doesn't actually put through this cabinet reshuffle? So lots of political factors driving sterling around. Now in terms of your Forex markets, we've seen, as I said, this dollar strength which is pulling euro dollar lower. A little bit of a rebound on euro dollar on Monday, or Friday into Monday, but again, is this a sustainable move? I don't necessarily think it is. Looking at the Bund Treasury spread, I think that's still got further downside to retest the 1660 level on euro dollar, and I think that will be a level that comes under threat through this week. In terms of cable, again, it is sort of a fairly volatile currency at the moment on certainly sterling basis. We're seeing a rally from just above 30 big figure, and I think we could even see if the sterling does continue on a run higher, we could see up to 32.50 again, but that is a key level. That's resistance, but also downtrend level around that sort of point as well. So will we start to see sterling flying around more and more on the political factors? I think we will. In terms of dollar yen, it seems to be fairly range bound. You've got in about 100 pips of range between 112.20, 113.20, 25 area. And I think until you see a closing breakout above or below that, you're not really going to see too much direction on that. Other key Forex majors which are finding direction, we've seen the Aussie dollar breaking down below 78 big figure, and we've seen dollar Swissy breaking higher through 97.70. Both are key levels. Both are going to be seen as key gauges for the outlook, I think, in the coming weeks. So these are big levels that the dollar is now breaking through on this strengthening argument. In terms of your equity markets, we've seen Wall Street breaking ever new high ground. A little bit of a stall on Friday, but nothing yet to suggest that the market is going to turn into a correction mode. Bit of profit taking you might see, but ultimately at the moment the sort of expectation of this Trump reflation trade or Trump tax reform is helping to pull equities higher, and if that continues, if treasury yields continue to push higher, I think you could still see equity markets pushing out further into new all-time highs. A little bit of profit taking, as I said, could be seen first though, but I think ultimately if this expansion in the treasury yield curve in the States continues, then I think we could see equity markets higher. In terms of your DAX, you've broken out above 12,950. That seems to be holding, but again, a little bit of consolidation could be seen as the market sort of pauses for breath. But again, still looking fairly strong on the medium to longer term basis. In terms of FTSE 100, still a laggard, still a negative correlation play on sterling. Once again, we see that on Monday morning, so watch out for that. But support at 7,450 is key on sterling. In terms of your commodity prices, again, the strength of the dollar is playing into gold. A little bit of a turnaround on the back of the payrolls report that we've seen since Friday afternoon, but will that continue higher? I think the positive factors for gold are generally around the safe haven trade. The North Korean geopolitical story is a sort of a helping hand for that gold price higher. Ultimately, though, I think the market prices that one pretty quickly, and I think that could start to see gold falling back again. But some key overhead resistance underneath 1300 as well could put paid to a recovery. In terms of the oil price, again, there's a lot of conflicting factors. We've seen the oil rig count, which fell away on Friday. That has helped to stabilise the correction on oil that we've seen in the last week or so. And ultimately, if Saudi and Russia start to sort of push for further production cuts, then we could see the oil price regaining a bit of support. But problems over supply always remain in the market, always tend to be a sort of a volatility play there on oil. But as I said, in terms of your key economic updates or key economic releases throughout this week, mainly US focused. We've got the Fed minutes on Wednesday. That is going to be interesting. That could have a factor on the dollar, but also towards the end of the week we've got the PPI and the CPI inflation data. You also got retail sales. Can these retail sales numbers continue to sort of be fairly positive for the US, which is what we have seen through the ISM data for the surveys. So I wish you good luck in your trading throughout the rest of this week, and I will speak to you again next time. Thank you.